As of right now, the stock market is closed, so we are looking at the most recent closing price for Keel Infrastructure Corp., trading under the ticker symbol KEAL on the NASDAQ exchange. At the close of the regular trading session on Friday, August 7, 2026 at 4 p.m. Eastern Daylight Time, Keel Infrastructure Corp. finished at $3.88 per share, after fluctuating between a daily low of $3.66 and a daily high of $3.99, marking a slight decline on moderate trading volume. While the public display on your favorite Robinhood stock trading dashboard shows a modest single-digit percentage swing for the session, there is a far deeper narrative playing out under the surface that most casual traders checking their Fidelity mobile app are completely ignoring. The expectation held by the broader market right now is fairly simple. Investors who track online investing trends see Keel Infrastructure Corp. As just another rebranded legacy crypto miner trying to slap an artificial intelligence label on its pitch deck to catch the massive tide of capital flowing into high-performance computing. For context, many traders who use a Robinhood app or check SoFi stocks remember this company under its former identity, Bitfarms. The consensus view on mainstream investing sites is that shifting from validating blockchain transactions to hosting massive artificial intelligence clusters is mostly corporate theater designed to keep the share price inflated. The reality, however, tells a drastically different story. When you look closely at the institutional filings, grid interconnection approvals, and real estate assets across Pennsylvania, Washington, and Quebec, Keel Infrastructure Corp. Is not merely rebranding, it is sitting on a secured pipeline of 2.2 gigawatts of energized capacity in regions where power is rapidly becoming the rarest commodity on Earth. While retail traders on an individual brokerage platform debate quarterly hash rates, hyperscalers and giant technology firms are scrambling for any energized megawatt they can get their hands on. The tension between the market viewing this as a speculative penny stock and the underlying reality of a multi-gigawatt energy footprint creates one of the most intriguing setups in the digital infrastructure space today. If you look at the recent stock movement over the past few weeks, the price action has been a battleground. Trading volumes have surged on down days, revealing heavy profit-taking from early retail buyers who bought during the initial announcement of the corporate name change. Yet, at the same time, institutional accumulation patterns on the Interactive Brokers platform show quiet buying near the $4 support level. The stock has experienced sharp daily swings, often trading in sympathy with broader technology plays like Nvidia stock and Tesla stock, as well as broader market sentiment surrounding energy demand for data centers. When sector momentum shifts toward high-performance computing, Keel Infrastructure Corp. Often sees sudden volume spikes as momentum algorithms kick in. Macroeconomic pressures have also played a major role in keeping the stock range-bound. Rising yields and tight credit markets make financing massive infrastructure build-outs expensive. Building data campuses in places like Moses Lake or Panther Creek requires hundreds of millions of dollars in capital expenditure. Analysts tracking Fidelity ETFs and Fidelity mutual funds know that equity dilution has historically been the go-to funding mechanism for companies in this space. Every time the stock attempts a breakout above $4, fear of a secondary offering or debt issuance creeps back into the market, capping upside momentum in the short term. Earnings reactions over the recent quarters reflect this constant tug-of-war. Revenue numbers have shown growth as energy assets generate consistent cash flow, but net profitability remains under pressure due to heavy capital spending and transitional costs. On platforms like SoFi Active Investing and Fidelity Brokerage, retail sentiment often turns sour after quarterly updates because net losses mask the long-term value of the underlying power purchase agreements. But sophisticated capital looking at Interactive Brokers trading data recognizes that near-term earnings accounting is secondary to the land grab for power. Comment below how many shares of Keel Infrastructure Corp. You currently hold in your individual brokerage account, or if you think power assets are the ultimate bottleneck for the tech sector. To understand where this stock goes next, it helps to examine the core business model. Keel Infrastructure Corp operates high-performance computing data centers and energy infrastructure across North America. The company owns data campuses across Pennsylvania and Washington in the United States, as well as Quebec in Canada. Historically, the business was focused primarily on Bitcoin mining, utilizing computational power to validate crypto transactions while offering electrician services in Canada. However, the underlying strategic value was never just the computers, it was the grid interconnections. In today's market, obtaining grid approval for tens or hundreds of megawatts can take up to 7 years. Keel Infrastructure Corp already has those interconnections locked in. This brings us back to the core conflict between expectation and reality. The market expects Keel Infrastructure Corp to struggle with the pivot, assuming that converting legacy crypto facilities into Tier 3 or Tier 4 artificial intelligence data centers is too complex and costly. Analysts on conventional investing sites point to past financial performance, highlighting years of volatile net income tied directly to crypto prices. They see a legacy past performance record and project it straight into the future, assuming the company will forever be dragged down by its origins. The reality is that big tech hyperscalers are running out of choices. Cloud giants and hardware builders fueling the rise of companies like Apple stock and Nvidia stock are facing severe power shortages across major markets. A site with a verified grid connection and direct access to high-voltage power is worth significantly more today than it was 2 years ago, regardless of what was previously housed inside the building. If Keel Infrastructure Corp successfully executes long-term lease agreements with Tier 1 enterprise tenants, the cash flow profile changes overnight, shifting from volatile computational mining payouts to highly predictable long-term contracted rent. Looking ahead, the future outlook for Keel Infrastructure Corp hinges on a few clear catalysts and potential risks. The biggest upside catalyst is the announcement of a major co-location or hosting contract with a recognized enterprise cloud provider or artificial intelligence startup. Such a deal would immediately validate the thesis, forcing Wall Street to re-rate the stock from a speculative asset to an infrastructure player trading at a multiple of contracted revenue. If you manage your own portfolio through self-investing or use an intelligent portfolio product like Schwab Intelligent Portfolios, these structural shifts are precisely what create long-term mispricings. On the risk side, execution timelines remain the primary obstacle. Delays in transformer deliveries, supply chain bottlenecks for cooling equipment, or regulatory hurdles regarding local power usage could slow down the conversion process. If capital burn continues without immediate high-margin revenue to offset it, management may be forced to raise additional equity, diluting existing shareholders and putting downward pressure on the stock. Additionally, if broader market volatility hits growth assets, holders on Robinhood Investments or SoFi Active Investing may panic sell during temporary dips. For anyone seeking investment help or evaluating online investment opportunities, analyzing Keel Infrastructure Corp requires looking past surface-level noise. The market currently sees a stock struggling under $4, weighted down by historical sentiment and broad skepticism. The reality is a company sitting on a 2.2 gigawatt energy footprint positioned directly in the path of the largest digital infrastructure expansion in decades. In summary, expectations surrounding Keel Infrastructure Corp remain anchored to its legacy past, creating a gap between market perception and asset value. While short-term price swings, macro interest rate pressures, and dilution concerns keep the stock volatile, the underlying demand for energized grid capacity offers a strong structural backstop. Whether you trade through Fidelity Wealth Management, use an interactive brokers platform, or hold assets in Fidelity IRAs, understanding this balance between temporary narrative drag and long-term energy asset reality is essential for making informed decisions on this stock.